Started off with a bit, now I got coin. I see where y'all going. Been poppin' since Web.1, hella hoes on Web2. I was living a dream, now I'm on Web3. And it is what it seems, topping the pyramid schemes, I'm telling you. I'll sell you a percentage on Nebula. Shout out to Vince, he'll set it up. Surfing on the web and I'm shooting at 3. I've been goated when I got my G.
What up, everybody? Welcome to another episode of Web3 Weekly Alpha. It's your host, Serpunk, where we cover everything happening in the digital renaissance. This week is jam-packed. I know I say that every week, but seriously, there's a ton of cover with crypto. NFT sales have picked up, and I'm just excited to run through with you guys. Thanks for joining us again, and let's jump right in to get everything covered up. Let's go ahead and start with the before we jump into the charts, actually, I want to we don't have a sponsor for the show just yet, so we're going to sponsor ourselves. The new Copy Pasta project, which we are working on, is going to be launching. We don't have an exact date, but we are looking for people who want to help us build, and please reach out to us in our DMs or follow the page, and we'd love to chat with you guys if you guys are passionate about Copy Pastas like we are. Let's jump right into the charts. Bitcoin and Ethereum is always where we start because they are the leaders in the market, of course. And there's really not been that much new price action happening in the last several weeks. As you could just see here, it's just been absolutely sideways action. 1, 2, 3, 4 weeks in a row where it's just kind of been in a narrow range. Even this week where we kind of came below support a little bit, it dipped to that 200-week moving average and we held that support level. So okay. I did see a little line. Okay. You want me to start from the top? All right.
Blessed by Bundy, blah, blah, blah.
Started off with a bit, now I got coin. I see where y'all going. Been poppin' since Web.1, hella hoes on Web2. I was living a dream, now I'm on Web3. And it is what it seems, topping the pyramid schemes, I'm telling you. I'll sell you a percentage on Nebula. Shout out to Vince, he'll set it up.
What up, everybody? Welcome back for another episode of Web3 Weekly Alpha. It's your host, Serpunk, where we cover everything in the digital renaissance that's happened within the last week. This week's jam-packed. I know I say that every week, but we really got a ton to cover with crypto. Sales are starting to pick up, even though volumes are still down. And I want to make sure we get it through all of it. So sit back, relax, as we enter the wonderful world of Web3. We don't have an official sponsor yet, so we're going to sponsor ourselves. Me and Snow Capone are working on a cultural project for Copy Pastas, becoming the digital sanctuary for these memes on the internet, and we are looking for people to help get this started. So if that's you, come build with us, reach out to us, DMs, or however you'd like to. Moving on to the charts, Bitcoin and Ethereum are the leaders, so we always cover those here. Let's take a look. When you just take a look at this chart, you could see that we've just been stuck in a range for the last 4 weeks. We even tried to dip below support this week down to the 200-week moving average and got bought up. And looks like we're going to close back above that support. So we're stuck back in the range. There's nothing really going on here. And just to be sure, it doesn't look like there's going to be much directional price action is we're kind of just stuck between these two ranges here, right above that 30K and 25K here. Same thing with Ethereum. Ethereum has a better support here where it's at right now than Bitcoin does. And Ethereum's kind of stuck between 1,800 and 2,000 here. It got rejected hard off that 2,000, and now we're just stuck sideways for the last 3 weeks. So until we get out of this range, I don't expect too much directional price action to show up. But something that is bullish for Ethereum, which we'll be going more into later into the show, is that staked ETH has reached an all-time high as of just a couple days ago. We know that the merge happened several weeks ago. There was some controversy whether people were going to unstake and sell their ETH, or if there was going to be an increased amount of people staking their ETH, and the bulls were right. There is more staked ETH, which is bullish because there's less supply on the market that people are going to be able to easily sell. So you love to see it. We'll talk more about that. I'm just going to talk a little bit about Pepe because Pepe was really hot for several weeks, and people are still talking about it as the cultural meme of the Web3 space. We talked about this getting a little bit euphoric up in this level on the show, and we had the blow up volume. We had the Phil Whalen top signal text. Phil, if you're watching this, I love you. And we just had tons of people getting euphoric on the timeline. We had crypto exchanges listing the token. So all the exciting things were kind of happening in the present. There was nothing too great to be looking forward to. And that's usually when things start to settle back down. And that's exactly what happened. So pretty normal. And also there's just no bull market. We're in different environments than when other coins have gone crazy in the past. And being in a bull market has been a really consistent requirement for coins to go crazy, especially your SHIBs and your Doge. So with all those things, Pepe pulled back heavily. Congrats to everybody that took the trade. And for now, I really don't know where it's going to go. I would just say maybe like Ethereum and Bitcoin, sideways. Shout out to Cyrus, one of the Chad NFT traders in the space, where he says, well, he originally pointed out towards the top of this action that somebody holding 14 Bored Ape yacht clubs were all sold below the floor, and they immediately took that money and put it all into Pepe. It was about $1.2 million, and they put it all at the top. So now these guys are down 336 ETH, assuming they held through the weekend. So this is the kind of action that when you see people doing these things at the top, it's another factor, another thing you throw into the equation. So these guys sold below floor, and they FOMO'd into a coin that everybody was FOMOing into. So not the kind of thing you want to be buying alongside of. There was some controversy with Pepe and Coinbase this week. So Coinbase, the Pepe army on Twitter has been hammering Coinbase and tagging them and commenting to list Pepe on the exchange, as Coinbase is one of the largest crypto exchanges in America. And Coinbase actually sent out an email to its customers this past week, and the Pepe army got furious online. And this is the part they got furious about. This is actually the text that was in the email, but the part that got them angry was this. Over time, it has been co-opted as a hate symbol by alt-right groups, according to the Anti-Defamation League. That right there set off a frenzy with the Pepe army. They went ham on Coinbase on Twitter. So ham that Beeple even made one of his daily pieces of arts, his everydays related to the Pepe and Coinbase war. But how crazy is this that one of the top executives that deals with listings and things along that nature tweeted out and said, "We screwed up and we are sorry. Yesterday we shared an overview of the Pepe meme coin to provide a fact-based picture of a trending topic. This does not provide the whole picture of the history of the meme, and we apologize to the community." Pretty big that he came out there and directly addressed this to the Pepe community, and you love to see it. Pepe is the culture. So we also talked about Turbo, and this is actually the coin that I played. This, I believe, was the second strongest shitcoin with the second strongest narrative. and really there's only one or two strong ones with a narrative and a cycle, and then all the other ones just kind of never really get going. So, but I decided to sell this one because one thing to take note is when they cut the head off of the leader, which in this case was Pepe, the rest of them are most likely going to lose steam. So when you start to see those things, and I became a little bit cautious with Pepe, I knew it was time to get rid of everything. And Turbo was the one that I played. I sold as well. But this is what the chart looks like now, and it's been down pretty significantly. But Fortune magazine covered this as a story because of the narrative. This artist who was struggling during a time where many digital art sales were not happening, he did something new and creative with the coin and used AI to assist him with it. But he was able to sell enough of the coin because, of course, he kept 10% of the tokens for himself as the creator of the token, and now he could afford a house that it brings his family closer to his daughter's school, which pretty fascinating story here, actually. All right. There is some pretty wild shit happening in crypto right now, even for crypto standards. Let's break this down. So there is a Bored Ape Yacht Club on Twitter named Ben.eth, and he dropped a token called Ben in the midst of this shitcoin mania. Now we all know Ben Armstrong, who is a crypto influencer, has been for many years. Ben Armstrong saw the Ben token because they're both named Ben. Ben Armstrong began to also shill the Ben token to the point where now Ben Armstrong is taking over the token and taking full ownership of it. As you can see here, I did not launch the project, but I am now taking over 100% of the Ben token. And he has agreed in principle to agreement with all the assets and liquidity for the Ben coin will be transferred to him within a week. And then the original Ben creator will become an advisor. So what's interesting about this is that when the news came out that Ben Armstrong was going to take over the Ben token, the token skyrocketed. And a ton of people who got in on the Ben pre-sale and bought it early made a ton of money. So then what happens? Well, first off, what the hell was Ben token anyways? Well, Ben.eth was selling it as it's a first of its kind influencer meme token, a niche micro influencer. But anyways, it's a way to get a small ownership piece of Ben.eth himself, as he explained it. But then a couple of days later, he gives full ownership to Ben Armstrong. So let's be real. But anyways, what's really interesting is the fact that Ben.eth was able to get Ben Armstrong to take full ownership over the Ben coin, and then all his original supporters of the Ben token made money on that. He took full advantage, and immediately after Ben takes over the Ben coin, Ben Armstrong, he goes ahead and drops another token called PSYOP, Psych Operation. So, and this is the part where it gets a little crazy. So he tweets, "I'm going to leave this pre-sale open for this token here for as long as possible. Last one was lit, so if it gets too crazy, I'll shut it, but I want it to be as fair as possible. Ultimately, the pre-sale's open until this tweet is deleted. Send ETH and only ETH to this address to receive PSYOP tokens. Please do not send from a ZEX, centralized exchange. The pre-sale is 30% will be available for sale. The rest will be public at launch. Thanks." Shares the requirements. And the mind-blowing thing is just a few days later, this guy, Ben.eth, had $5 million sent to the address. Yes. I've never seen anything like this. The fact that you're sending money to somebody without actually receiving anything, right, besides just a verbal agreement that, yes, if you send me money, I will send you the correct amount in return in token. You're trusting a random monkey JPEG on the internet with your money. It's a complete gamble. But the fact that $5 million and tons of people decided to take this gamble is mind-blowing. It just kind of shows you where we are in the crypto cycle, where people are just trying to gamble in and make it all back in one trade kind of mindset. But that's what's going on with that situation. And just to make matter's even crazier. He tweets stuff like this after he receives this amount of money in his wallet and says, "Sorry, the contract hasn't been posted yet. My dev got scared and ran away. Good thing I am uber connected in crypto, and I have a team of devs flying to me right now." This guy's been an absolute crazy personality during this situation, and he's just been able to bring a ton of attention to him due to it. But just one of the most wild things I've seen in crypto in a long time. But as I've been kind of cautious the last two shows on shitcoins, on Pepe and Turbo and everything, just getting a little bit ahead of itself. I call it the end of shitcoin season. There's no guarantees, but there were some signs there, and I still do kind of believe that we're going to be kind of dying down, and the shitcoin season looks like it's just getting a little bit too crazy, where you start to see shit like this. Shout out to DC Investors, one of my favorite follows for Crypto Takes, where he says, "Remember when the bull ended, there was a round of grifters who torched their reputations and did ridiculous stuff to make some last-ditch ETH because they realized they weren't going to make it." Yeah, I forgot to mention that this could happen twice via a separate wave in the same cycle. You're seeing this with influencers ruin their reputation, selling shitcoins, and trying to make that last dollar before I guess they fall into full irrelevancy. And I think Brian Flynn, with all the noise surrounding crypto right now, I think this is a really good point to take away and not get too deep into what's happening. It's easier to be negative on crypto now, with shitcoins and regulatory scrutiny taking center stage. But with blockchains now being able to scale, and there's also a tremendous opportunity to reimagine how ownership is formed and distributed. And that alone is really exciting. And I agree with Brian. You're starting to see more and more people build on L2s. You're starting to see advances in the crypto space, even in the midst of all this shitcoin and the actual ton of backlash we're getting from regulatory agencies. There's still, I think, a light at the end of the tunnel. So always good to try to stay objective on where we're at. Now, join me as we cover some NFT charts. We're going to start off with the leaders. Bored Ape Yacht Club has officially broke support on the daily, on the weekly. I know I still get a ton of backlash for people saying you shouldn't chart NFTs, but to me, this is a clear level. 50 ETH is to me a psychological mark, and we're below that. Unless we recover that level fairly quickly, it's not going to be good, and it's a pretty big level, so I think if we stay here long enough, this really is a line in the sand here. Same thing with Mutant Apes. Mutant Apes, you could tell that the 10 ETH mark was line in the sand. It was the major support. We broke through that, and the longer we stay here, the more it's confirmed move in that downwards direction, and let's just see what happens from here. But it's not looking positive. D-Gods, another one that was sort of technically a leader in the space. It looked like it was just getting walked up slowly over the weeks with blur farmers trying to really just get people wanting to be involved in this D-Gods action recently. And then at some point, a blur farmer or multiple blur farmers just dumped on everybody, and the floor just fell right from under people. And that's just the kind of environment we're in. No moves really stick in NFTs. It's just a blur PvP game right now, and I don't really see anything changing in the near future. You did have some news on Blur, where Blend, their new lending platform, Blend, announced that D-Gods is now able to be borrowed, and you can lend, and you can also buy and pay later for your D-God NFTs. Instead of paying 8.6 ETH, you can pay 1 ETH, and we know that's not been really positive for the collections already on the Blend collection. On the Blend platform. So nothing to really get too excited about, but news nonetheless. Pudgy Penguins actually still holding up relatively strong compared to almost everything. It tried to get below that major support line for ETH, but it just keeps getting bought up, and really showing some resiliency in this market. So one to keep an eye on as always. Also, Matt Fury, the creator of Pepe, his projects continue to hold up and buck the trend more than almost every other project besides things like Pudgy Penguins. As you can see here, his project Heads has just been going sideways, which in this market is uber bullish because everything's just been down only. and it's been stuck right around that 2.5 ETH mark. Shout out to Matt Fury. Azuki. Suki's been one that's been really strong. It did deny that 15 ETH mark multiple times now. We need to stay above this support level here to kind of stay a little bit more positive on the price action short term. Captains jumped up this week in terms of price. There was some news dropped by the captain's team that I'm going to cover in just a second here after this chart, but that's what caused this price action to really jump. But it looks like it got sold into a little bit, and it's still below this 80 resistance. So let's see, but still looking relatively strong as one of the strongest moves in NFTs in the last several weeks. Same thing with potatoes in that same ecosystem as captains in the meme land ecosystem. And what is the news? Well, a couple days ago, Meme Land dropped some news on Meme Coin where they said 69% is going to go to the community. And the biggest piece of alpha that they dropped out of nowhere late at night one of these nights, a couple nights ago, and it wasn't even their own post. It was a post in somebody's comment section. And they said they should have saved the ETH, talking about people gambling on shitcoins, for meme token, the community round pre-sale. So they confirmed that the pre-sale is only going to be open to people who own an NFT in the meme land ecosystem. A captain, potatoes are going to get that exclusive access to the community round. So that got people bullish. They hopped in that and tried to play that short-term meta on the news. But let's see if that sticks. But pretty cool. If you own one of the NFTs, you're going to be able to buy some of these tokens. They're out of Hong Kong, so they don't have to deal with as much as regulatory actions as we've spoken before. Wrapped CryptoPunks. We know CryptoPunks are super elite in the space, but their price has just been down only still. It tried to bounce a little bit here with a relief rally, but that just got absolutely denied. Matumboed the next week, and it doesn't look like we've officially found a bottom here because there's still just so much weakness in selling. As we looked at this chart from a longer term view in previous shows before they messed it all up with the wrap CryptoPunks, it looks like support is around that 42 ETH mark. So it still looks like we're in this downtrend, and maybe that's where we end up finding support. Milady Maker, massive move. This literally doubled in one day, where it went from pretty much a little bit above 3 ETH, 4 ETH to above 7 ETH in 24 hours, really less than that. And what caused it, you may ask? Well, one tweet from Elon Musk will do it. And Elon Musk a couple days ago tweeted this. It was a meme of Milady where it says, "There is no meme, I love you." That simple tweet took this floor from pretty much almost 100% move. But the very next day, next couple days, it retraced the entire move of Elon, and we're now back below 4 ETH. That was like peak liquidity event for Miladies, especially after just being up only for 1, 2, 3, 4 weeks in a row. That was your time to really take advantage of peak hype, especially in a market that's just really not super bullish. So congrats to everybody that's winning there. And Elon for always pumping our bags. CloneX, Doodles, Moonbirds, they all look the same. They've been down huge over the last year, and there's just really nothing to be too excited about there in terms of the price, even though I know these teams are still building and executing. Shout out NFC Statistics, where he illustrates here that Bitcoin punks are going through the roof on news that Binance will be opening up to ordinals, which is NFTs on Bitcoin blockchain, as well as overall excitement around the Bitcoin NFTs. We have a ton to cover around Bitcoin NFTs this week because there's some serious volume going on the Bitcoin blockchain. There's a lot of controversy around it, but I want to make sure we break it down clearly. But good to see that at least some NFTs are doing well, and that's over on the Bitcoin blockchain right now. And last but not least, I want to cover 4 charts from some of the grail digital art pieces in the crypto and NFT space that look, to me, in my opinion, look like they're becoming a bargain around these prices, and possibly opportunistic areas to start looking if you've been wanting to get in on these. Chromie Squiggle, which was one of the very first generative art pieces on Art Blocks by Snowfro, who was the founder of Art Blocks, is down pretty significantly from the peak, right? It went from 16, it pretty much cut in half from 16 to 8 ETH, but it's starting to find a support here. And if you ever wanted a squiggle, it's below 10 ETH. And I really do think this is one of the staples in the generative art NFT space. So take a look at that. Fidenzas, which is also on Art Blocks by artist Tyler Hobbs. This thing has been down from 100 ETH to hit 40 ETH, as you can see this. But this has been a pretty long-term support area. If you go back all the way to last year in April, late April-ish, or beginning of June, you could see that this price got that down to that 40 ETH mark from the peak of 180. But it seems like that 40 ETH mark could serve as support here, and it could be an opportunistic area. It seems like the risk reward is getting interesting on these areas here for these pieces that are sought out for in the space. Autoglyphs, which has such a short supply, small supply, 512. This one went from literally over 320 ETH to 155 ETH. It's been cut in half. And it's back down to these low prices from the beginning of 2022, where it had a similar move off the top. So things don't go straight up, as you can see, but also things don't go straight down. So if you're still bullish, crypto and NFTs and Larva Labs' Autoglyphs, which is the first generative on-chain art ever, and think this will be significant in the near future as more things go digital and digital art takes off, then these could be good risk-reward areas if you've been looking. So I think that the art market is starting to look opportunistic, especially relative to like regular NFTs and shitcoins. All right, let's jump into some market impact. There's a lot of things that are impacting demand and supply that we need to go over in detail. Shout out to NFT Statistics. He always comes through every week with the fire data. I highly encourage you to follow him and follow his daily show. You'll learn so much. But he says here with high gas fees, NFT volumes tumbled over the weekend. He's talking about last weekend. The real takeaway here is that Blur had fewer than 1,000 unique buyers for the first time in a day. This is how much people are just not messing with NFTs right now. Gas prices have come down a bit in new blend projects today, so perhaps we get some reprep. So essentially this is just illustrating that volumes, unique wallets, gas fees. Gas fees are down a little bit, but just new people are not entering the space and current people are not actively trading, and it's just getting worse and worse by the day. This is a better illustration. Shout out again to NFT Statistics, where he says new wallets buying an NFT for the first time. It's just literally been down only. If we don't get any new participants here, then nothing is going to change, right? We need new people to bring them in to bring volume back into the market. New wallets buying a first NFT for the first time has been down only. And you can see here by NFT Statistics where he says fresh new wallets buying NFT for the first time is down to levels not seen since not last year, 2 years ago in 2021, May and June. So we are down bad, down bad. Again, NFT Statistics with the amazing data. The projects on Blur, which no longer are offering 2x bidding rewards, saw total trades go down by 65% in the last 10 days. It goes to show how strong the Blur incentives, how strong the impact Blur incentives have on how much volume is traded for a certain collection. Goes to show that the market is just dead right now, and the ones that are trading based on points for Blur. And if those points weren't there, who knows where we would be. Shout out to Delphi Digital, where they're always putting out amazing reports. Arbitrum, which is the largest L2 scaling protocol on Ethereum, is currently rivaling Ethereum in daily transactions while significantly outperforming Optimism, which is his competitor. That's the second largest L2 on Ethereum. So you can see here the baby blue is Arbitrum, regular blue is Ethereum. Arbitrum is now starting to rival Ethereum in daily transactions, which I really do hope we continue to trend in this direction because gas fees has just been ridiculous. Especially we all got reminded of that during the shitcoin season. And then another illustration of where we are with L2s. The total value locked of L2s, the major ones, Arbitrum and Optimism, as a percentage of Ethereum L1, total value locked, has surpassed 11%. And this has just been up only. I know we're used to down only on the show for the last several weeks, but this has been up only. So the amount of people locking their value of crypto onto L2s has really just been up only, and we're up to 11%. I really do think this number is going to just continue to trend higher over the weeks, months, and years, as it's just much cheaper, still fast, and we use the security of Ethereum. So I'm really hoping we get there. Probably, will we ever get to 100%? I don't know. But I really do hope more people start building on there and make it more user-friendly. All right. The founder of Binance, which is the largest crypto exchange in the world, CZ, states that there's a lot of FUD because Binance halted Bitcoin withdrawals on its exchange this week, and they blame Bitcoin network fees. Why? Well, because Bitcoin fees went up 18 times this month. Its regular fee price, which it's really been a crazy beginning last couple weeks to this month with the Bitcoin ecosystem in general. We're going to go into depth as to why this is, and it really is due to BRC20s, which is the ERC20 version of Bitcoin. Where there's shitcoins now on Bitcoin, believe it or not. There's NFTs with ordinals that was already exacerbating volume. So we're going to go into that, but it's getting so bad that Binance is having to stop Bitcoin withdrawals. And so it's pretty crazy. But anyways, moving on. PayPal holds, well, let's jump to this number. $943 million worth of crypto assets for customers on the Venmo app. 500 million of that 943 is Bitcoin. So retail still owns some crypto on the centralized platforms like Venmo. Good to see it. They just released their quarterly earnings, and this is where we got those numbers from. Shout out to Blockworks, where they say Blur's NFT lending protocol has seen 95 million in flows over the last 10 days. So it's doing well. It's risen to the top of the lending market, and they just really released. So shout out to Blur, and loans are being taken out. That's for sure. And a little bit more about the loans. Zuki is so far the most popular collateral on Blend, that loaning platform, representing nearly half of the active loans. Those lending out against the Zuki-backed collateral are earning an average of 17% per year. And CryptoPunks, which have almost 1.7 million in active loans, stands much higher, or averaging around 39% APY for lenders. And then there's been more than 3,000 individual Blend loans that have been opened up to date. So 3,000 loans, $95 million in loans in the first 10 days. It's been a success for Blur's NFT lending protocol. Will Clemente, shout out to him, where he says Jump and Jane Street pulling back their crypto market making activity is now great for a market that has already become less liquid throughout the year. And that was the news. We'll be covering that a little bit more. But Jump and Jane Street is they're trading firms, big trading firms that were providing market making activity, and they're gone due to regulation requirements. So you can see here that liquidity has just been down only since FTX collapsed, and we're still at those. Even though crypto bounced, liquidity is still at low levels, and this doesn't help, right? Shout out NFT statistics again, where he illustrates. Well, KY Crypto illustrates first, where he says the most notorious dumper on Blur got scolded last night. Points are gone. And NFT statistics also says one of the biggest pump and dumpers, a wallet that had amassed 110,000 points on Blur, got sent to zero yesterday with a skull. They're working to remove wash traders and people who use bots to remove bids. Blur did say they were going to start doing this. I think it was not last week, 2 weeks ago, sorry. and they said it was going to take weeks, but it's only taken about a week and a half, and they removed one of the biggest players on the platform and just zeroed them out. How crazy is that? This guy's been working his ass off, but really just pumping and dumping on people and doing wash trading of sorts, and they took all his points. That's just like that. So if you're one of these people that is pumping and dumping and doing things that goes against the policy for Blur to receive your Blur points and Blur token, then watch out, because Blur's not messing around, as you can see here. All right, let's jump into the large sales of the week, which that last week was pretty dead. This week started to pick up a little bit. D-Gods. I actually kind of like this D-Gods. Sold for 27 ETH. Yes, this picture here sold for $50,000. Shout out to D-Gods. A lot of Grail sales still happening in the D-Gods ecosystem, even though I know we looked at that chart earlier and it got slammed probably by Blur Farm action. There's still some Grails being sold in that ecosystem. Curated. We've had Curated on the last couple of weeks. They are a collective that buys crypto Grail art pieces, some of the most expensive, one of the most amazing collections in the world for digital art. I looked at it today, and oh man, I was fascinated by the pieces that they own. Great collection. I encourage you to look through it. But Curated put another Meridian in their collection. They bought this CryptoPunk top hat from D's for $191,000. These guys have been spending bread lately, and it didn't stop there. They also bought one from Def Beef. Def Beef just dropped a new collection called Nominun. Token. They bought Token 9, and they're just not stopping. They back to back. They also bought one from Alpha Centauri Kid, which honestly, this was an amazing drop. One of my favorite art drops in a long, long time, called The Broken Keys, happened this week. We're going to be touching this in detail here in a minute. But he acquired he was the most expensive buyer for this, the Looming Unknown piece here, for 30 ETH. So shout out to Curated. It's pretty simple. If you're selling Grails, they're buying Grails. And I think it's smart because they're buying during an opportunistic time, as I showed, in my opinion, as I showed on the charts earlier. Shout out to OSF, where he illustrates a really good point here, that in the depths of a bear market, we've seen Grant Yoon, which is the creator of this art piece, hit an all-time high in art sales. We've seen Sam Spratt hit an all-time high in art sales. And now Alpha Centauri Kid, after this week, crushed it. Absolutely crushed it with Broken Keys. This is one of the pieces. These guys really are killing it in the art space. In the bear market, where things are quiet, volumes are dead, these guys are putting out beautiful work, and people are paying high ticket prices for it, and they don't care. They want to collect these guys. Shout out to NFT Statistics. It shows that this gold fur doggo, which is part of the Bored Ape Yacht Club and Yuka ecosystem, sells for 8.3 ETH. Memeland MVPs, which we know is an exclusive tier of NFTs in the Memeland ecosystem, sells for 57.5 ETH, $104,000. I believe this was in the top 5 all-time MVP sales. So continued bullish action and people spending up for the Memeland ecosystem. Rib Kache, I'm sorry if I didn't pronounce that correctly, but this piece sold for 16 ETH, $28,000. This guy's really been taking off. His pieces are now consistently selling for around these prices, which or higher. So congrats to him. Bored Ape Yacht Club. This grill Bored Ape Yacht Club sold for 195 ETH, over $350,000. A pretty large sale in this market right now. Another D-Gods. What a surprise. Every single week, I feel like there's a grail selling for top prices. 52 ETH, $92,000 for this D-God. Seems to be a really rare one. Shout out to the people involved in that trade. Okay, I thought this was really cool and interesting and actually ultra bullish for Squiggles. Shout out to NFT Statistics, where he points out there that earlier this week there were some interesting sales for squiggles. There was a fuzzy for 9.5, a ribbed for 8.5, color spread for 15.4, which a little bit above the floor there. Nothing really too crazy with these sales. They're all kind of within where the floor is at and where they've been selling, which is really below 10/8 right now in this bear market. But this is what I found interesting. People are beginning to use their squiggles as email signatures and even signatures on DocuSign, actual documents, right? So I think this is the ultimate flex. Like if I were to go sign a deal with somebody and their signature was a squiggle, I'd be like, this guy's a boss, right? Like this guy knows crypto art. You know, he has the money to own a squiggle. Or if I saw it in an email, I'd be like, that's so cool, right? Like it's very unique. There's only limited amounts of these. So this is the ultimate flex. If people continue to use squiggles in this way, not only is squiggles a grail in and of itself because of its origin, but this is a new use case that I just didn't really see happening, and it's really cool to see. Moving on. The Yuga NFT art on Bitcoin blockchain, one of their pieces sells for 29.9 ETH, $54,000. This is actually above what they've been selling for, which you finally like to see because it is below what they were auctioning off for on the higher end. Alpha Centauri Kid. Let's cover the monumental Broken Keys art drop. I believe it's a total of 48 one-of-ones, all part of the same drop, the Broken Keys drop. Shout out to NFT Statistics for putting them all together here. But these are all the pieces, or if not most of the pieces. They're all related around pianos, but just in all unique ways. And I just really do think that on their own they look great, but knowing that they're a part of this beautiful, thought out drop, I think just makes it much, much better. And the market agrees, I think, because they spent $1.3 million is what he raised in total, 731 ETH after selling out every single piece. And this was his response. Shout out to Alpha Centauri Kid. All auctions have been settled. I don't quite have the words yet, but I'm truly shocked and proud and speechless and terrified. But I can't thank you all enough for coming together to support my art and give me a place to tell these stories. I might go for a walk now. I love you. Shout out to him, man. It seems like he's been in the space for a minute. I looked at some of his old drops. He's just a really great artist, and really knows how to do things. And now the floor price on OpenSea for the Broken Keys is 30 ETH. So anybody who had the chance and won on the auctions for one of these pieces is now up. And congrats to the buyers. Congrats to Centauri Kid. And if you want one, you can now grab one for this price. The largest sale right after the auction had ended was that went to curated, as we illustrated before. It was 31 ETH, $57,000. One of the higher sales as well is the yellow keys here, 26.9 ETH. Just a beautiful piece, both of them. And this was pretty interesting to see here. New York Doorman.tez. They spun up a PianDAO, as you can see, created PianDAO in 24 hours and raised the funds to purchase the Mad Pianist, a grail from the Alpha Centauri Kids Broken Keys collection. So as soon as the drop happened, him and his friends got together, pooled money together so they can buy this grail and hold it, and however they divvy up the ownership. But that's how bullish people were on this drop. That within 24 hours, they were creating their own DAOs to be able to purchase a piece of this history. You don't see that often for art drops. All right, one of Grand Yun's pieces sells at a Christie auction for a really, really high price, especially in this kind of market, $107,000, 60 ETH. Shout out to Bob Locus, as he is the buyer here. As he says, I finally have one of your pieces, Yun. And really, Bob's been buying some grails lately. Bought one from Sam Spratt a couple weeks ago on the show. Spent a good amount of money there. And I believe there was another one that he purchased now here today. This week with Grant Yu. Shout out to Grant Yu and Bob. A Nakamoto card. These cards don't move that often, but this one sold for 55 ETH. This card is considered the grail of grails for Pepe cards. It's the first Pepe card in the first series. I believe that it was on the Bitcoin blockchain back then. Sold for 55 ETH. I did look at some of the previous transaction history. I believe some of them were selling for 75 ETH, 88 ETH. So this is on kind of the lower end, which makes sense where we're at. But again, these are considered to be grails of grails for Pepe NFTs for sure. All right, let's jump into some new mints of the week. Shout out to Giancarlo and Mint or Skip. They're always keeping us up to date on what NFTs are bound to drop and what's on the top of their list. I do like some of the things on their list here. The Nike Air Force 1s is dropping very, very soon. Either tomorrow or the next day. We'll be talking about that in the next slide. And then just a couple that have been on this list for a little while, but it's good to just remind ourselves what's on this list, what you may be interested in, or just to kind of gauge where the market is at. Also, we talked about Squiggles. So they're doing an auction for charity where they're going to be selling 10 unminted Squiggles in a 24-hour auction on Thursday. So you're going to have the opportunity to mint a Squiggle, right? If you've ever wanted to do that, here's your opportunity. You possibility of you minting a rare. So keep an eye out for that. And shout out to Giancarlo. Sign up for his newsletter. Follow him on Twitter. He's always just keeping us up to date with the new mints of the week. We talked a little bit about Dot Swish with Nike earlier. A little bit more details about their drop. The first access sale is tomorrow. And all you got to do is make sure you have these things handy. Your .swish login info, your cell phone for 2FA authentication, and a credit card, debit card. People who received the poster will have the entire first access period prior to general access on 5/17 to purchase, so no rush there. All right, not much on the new mint list, so let's go ahead and dive right into the NFT news. Shout out to Wilson, where he says the proposal passed, transaction should execute Tuesday. Proud to be a part of a DAO that puts money on the line again and again to support crypto and public goods. Me too, man. I mean, I'm not a part of the DAOs officially, but I love supporting them. I love repping them because I love what they do in the space. Shout out to Toady Hawk, where he says, this proposal 278, now DAO has just minted 5,000 copies of the Coinbase Stand with Crypto NFT, and they also donated $100,000 to Gitcoin Crypto Advocacy Round. And you really just love to see it. Not enough coverage for nouns, in my opinion, in the space. So you know what? I'm a huge fan of them. I'm going to cover them. A little bit more from nouns DAO, and I honestly think this is really cool and unique. ETH Operating System OS would like to extend a heartfelt thank you to the Nouns community for the support of Ethereum public goods with the passage of Nouns Proposal 279. A dedicated ETH operating system phone is coming. And of course, there will be a Nounish edition. We know that Solana just dropped their phone. Actually, it's just gone live for public sale. That's a piece of news later in the show. But now there's an Ethereum phone that's going to be coming. And what's so beautiful is that Nouns, ETH-based NFT DAO, is the ones supporting them financially to make this happen, at least initially. So you love to see this. VeeFriends. Very interesting here. Let's take a look. Of course, I'm not surprised that Gary Vee is going this route, but what they're doing is that they're dropping toys that are 1-inch rubber toys. They're going to be 10 unique characters per season, with many seasons to come. Launching season 1 and 2 for a total of 20 characters. But this is the interesting part. They're designed to expand the VeeFriends IP through collectible toys at an affordable price. VeeFriends vending allows store owners and operators to use VeeFriends branding within their retail location to generate revenue while exposing their VeeFriends characters, traits, and IP to the masses. So how does this work? VeeFriends vending. There's different packages. You can get vending machines, 1,500 toy capsules, good for one location. You can get multiple vending machines, good for 3 locations. Even more for multiple locations if you own multiple stores. If you have a franchise of more than 30 locations. So he's teaming up with, ideally VFriends owners that want to put these VFriends toys, vending machines in their stores. Pretty interesting idea and a unique way to get the VFriends brand out there in real life in front of people. So I think this could be pretty cool. If you're a store owner, take a look at this. Maybe VFriends people will come and support your business. But either way, I think this is a unique way to get the brand and name out there for VFriends. Shout out to them. Binance NFT. We talked about it a little bit earlier, but Binance NFT and Bitcoin Ordinals. Bitcoin NFTs are soon coming to the Binance NFT marketplace, offering more opportunities for collectors and creators. So pretty big deal here, as Binance is the largest crypto exchange in the world. Also, Yuga Labs' new CEO does his first ever sit-down podcast, however you want to call it. I did listen to it. Very insightful. He's extremely ambitious on what he wants to do with Yuga, how many millions of users they want to bring into other side. Encourage you to read it. Encourage you to listen to it. And he also came on Twitter, changed his profile picture to a bored ape, and said, "Does ape still follow ape?" So love to see it. People says, Beeple holders, in order for you to participate in an upcoming GOAT-related airdrop raffle, you'll need your NFT in a non-custodial wallet. The snapshot will be taken on Thursday at 12 p.m. Eastern Time. Also, he notes, this will be an airdrop. You don't have to connect your wallet, blah, blah, blah. Please be safe. Very interesting to see what Beeple's going to do here. Beeple is crazy, so you really never know what's going to happen with him. Huge news in the huddle for the Pudgy Penguins. They are happy to announce their $9 million seed round led by 1KX. As you can see here, there's multiple people, multiple investors invested, involved in this round, and they all have a Pudgy. I think that Luca is really putting on a show here on how to run an NFT project, how to build out IP. They're on their way. Super bullish, the Pudgy Penguins here. Gabriel Ledin, who is apparently the godfather of free-to-play on mobile, they announced something, a new contract for NFT creators to mess around with royalties. They dropped this. This is not necessarily brand new news. But what they did is they made some adjustments to the contract, and that's all we're going to cover here, all right? So he says programmable royalties. Customized royalty logic, unlocking new ways to reward your communities, partners, and affiliates. Build stronger NFT communities by rewarding engagement and participation. With 100% royalties to the minters. So if you're somebody who minted the NFT originally, any royalties after that in perpetuity would go to you as the original minter. I'm assuming is what that means. Shared royalties and royalty tokenization. Let's talk about a little bit more of each one of these. Minter-only royalties. This version of the programmable royalty grants 100% of the royalties to the minter of each individual token, and it's immutable. Cool to see. This version, which is the shared royalties of programmable royalties, uses payment splitters to share royalties between the creator and the token minters. Transferable royalties. This version of programmable royalties uses a secondary NFT to represent ownership of royalties. And the minter receives the royalty rights NFT to start, but the rights can be transferred. It's a little bit different. And just think about the implications of this and how NFT projects can mess around with this to provide more ownership to your NFT holders and just more rewards and just all kinds of things. I think this is very interesting. Shout out to On1 Force. They said that applications are live on their site. And what are they talking about? Well, On1 Force worldwide, a new paradigm in community support and business development begins now. Franchise and World Cup applications open. Very, very interesting. Gary Vee and VFriends are putting vending machines into your franchise. Well, On1 Force is turning your NFT and your ownership of that NFT into a franchise model. So you're now starting to see very different, unique strategies which each NFT project with their community here. And I'm going to read a little bit of this here. Welcome to On One Force, the franchise model that provides personalized support and resources to help franchise holders develop their business. Our application process is strict, but ensure that we can offer tailored support. We are revolutionizing the way PFPs are seen. No longer are they considered JPEGs with a promise. When you own an On One Force PFP, you are eligible to then receive benefits to our guidance and resources, like a franchise. We understand that starting and growing a business can be challenging. This is why we provide a wide range of support in the form of assets, marketing, network, distribution, and funding. Our goal is to help franchise holders succeed by providing the tools and the resources they need to thrive. Join our franchise model today and let us take your brand. This sounds like a McDonald's commercial. Like, buy a McDonald's franchise and we'll provide you with the funds and the resources. You see how this is kind of changing the game here? Very interesting. It's like a decentralized McDonald's, right? Where like it's kind of a community thing from the start. Really interesting news from On One Force there. Moving on, shout out to Lucky Trader where he says Boss Beauties is partnering with Barbie to drop collectibles on the Flow blockchain owned by Dapper Labs. Really cool to see. Barbie getting into the NFT game, which makes total sense. Boss Beauties, which is honestly one of the cooler projects. This is one of the first NFTs that I ever bought, Boss Beauties. They have a deal with Marvel, and they have a deal with Barbie. They're doing their thing, especially for women projects. All right. Shout out to Anya here. This is a random tweet that I found on Twitter, but very relevant to the future of digital ownership. Let's listen in here. A laptop arrived at my house addressed to my 16-year-old son. I didn't buy it. I know neither his dad nor my girlfriend did. I sat the boy down, took the computer, his phone, and said I'll seize his desktop too and ground him indefinitely until he said where he got the $1,000 to order the laptop to himself. He says, video game skins. So this relates to that. Mike Dudas, shout out to him, where he says Roblox sold $774 million of digital currency tokens in Q1 because they just released earnings as well to 66 million active users. But again, nobody's going to buy NFTs. Nobody's going to buy digital collectibles. The metaverse is completely dead. But there's 16-year-old kids buying $1,000 computers with video game skins. So let's be real. The numbers, the data, the trend, all say otherwise. If you're someone who's against this or just fighting the reality, just follow the data here. It's right in front of us. Shout out to Alex Lynn, one of the founders of Valhalla, where he says NFT projects reward holders with airdrops, but often they don't take into account holding time. We believe loyal long-term holders should receive better rewards than short-term airdrop farmers. Because of this, we've created a battle pass, a Web3 loyalty program. And thank you for the thread, but also for giving us the TLDR. So this is the symbol. And honestly, Moonbirds has put some of these things in action, like based on the Moonbird you own, you get a specific reward. Your nesting rewards, if you're, they just did that drop for diamond nesters who've been nesting the longest since day one. So I think they're going more of this route. But let's go ahead and jump right in. Your NFT levels up every day that you hold it. You receive rewards at a certain level. Rewards get better at higher levels. Rare types receive more rewards. Your level also qualifies you for rewards on their platform that they're building called Join Stacked, their Web3 YouTube/Twitch challenger. Very interesting. So these guys are building a product and they're using NFTs to, I guess, create their first community that they can onboard. Prohibition.art. It's an open, community-driven, and on-chain generative art platform built on the Art.Blocks engine and deploying on Arbitrum, an Ethereum level layer 2 coming soon. I talked about earlier in the show that we're starting to see more people build on Arbitrum. This is an example. You love to see it. I mean, we just really want fees to go down, gas fees. We shouldn't have to pay an arm and a leg to buy some digital art. So we love to see this. And in partnership with Art.Blocks and Arbitrum, some of the best in the space. Some not so positive news. It hurts my heart to see this, as I think these guys are genuine builders in the space. Andy and Dees, to Sarah and Esther, which was what these guys were working on, these two platforms that are separate platforms. Tessera was for fractionalizing NFTs. Escher was a platform to find artists' open editions. This is what Andy has to say about closing up shop. After a lot of deliberation, we have made the incredibly hard decision to wind down all of our operations at Tessera and Escher over the next few weeks. This was just a couple days ago. As we really dug into the economic model for Escher, we saw that the targets we needed to hit to attain profitability compared to the time and resource costs to scale there just didn't add up or make good business sense. So what they're doing is they're winding down operations responsibly before it gets too late, which honestly I honor and respect that. I don't know the situation, but a lot of crypto guys don't do that. They wait until things just blow up in their face and then everything just looks bad. So these guys, I think, have always been trying to build real products that the crypto community needs. They actually raised VC money months ago, and everything looks promising. But this bear market with, daily active users and NFTs at like less than 5,000, it's really hard for these kinds of platforms to become sustainable. So I think we're going to see a little bit more of this, and it's just that kind of time in the cycle. Shout out to Jack Butcher, where he hints here at a partnership with Christie's, with checks, not even Pepin. It looks like it's checks here. So shout out to Jack. This is pretty cool. As we know, this is an art project, not a NFT utility project. Shout out to Sammy for the cool thread where he talks about NFT Worlds is rebranding to Topia. They've just dropped their master plan. Topia is a collaborative game and creator platform built by Minecraft's modding and the third-party games ecosystem pioneer. The team comes with years of experience. It's committed to bringing you an enchanting gaming experience that goes beyond the boundaries of creativity. But really, this is the important part. They encourage innovation, collaboration among enthusiastic players, driven for content creators and help contributors. And we know that NFT Worlds got banned from the Minecraft server, so that whole project they were initially building just pretty much was scrapped overnight. But they pivoted, and these guys are still building, enable boundless gaming experiences that have been hindered by Minecraft's limitations. There you have it. That's their new name. That's their new vision. Keep an eye out for that. All right. Interesting post from Coinbase. I don't really see these kinds of posts from them often. Where Coinbase says mortgage rates in somewhere in Africa have reached as high as 22%. Much of the population along the coastline can't get a loan to buy a house, and shelters built by hand get destroyed by cyclones. Let's see how crypto can help update the system. Enter Empower.io, a company making homes more accessible to Mozambicans by tapping into NFTs and blockchain technology to update an antiquated loan system. They work in partnership with Casa Rio to construct cyclone-resistant homes in central locations. This is the Twitter page of Empower, unlocking Africa's affordable and climate-smart housing opportunity. The interesting part here is they're solving old problems with new technology on Cardano. I haven't really seen a lot of projects being building on Cardano lately, but hey, you love to see it. Through decentralized funding models and NFT tech, people can purchase a home without having to obtain a traditional mortgage. These houses start at $10,000 price points and are affordable for low and middle income families. So you love to continue to see real world use cases for crypto and NFT and blockchain technology, regardless of the blockchain. I mean, if it's changing lives and it's been built on Cardano, then so be it, right? All right. InnerSpace, which is a leading lending, staking, borrowing, buy now, pay later platform in the NFT space. Shout out to Starmoa, where he gives us the TLDR here. There is a major conflict happening internally with the team, but it's happening publicly, which is making a lot of their users nervous. And we'll talk about that here in a minute. But he gives us the TLDR of the situation. Yubo, which is the CEO, took user funds intercepted by the white hat block sec in the March flash loan. So InnerSpace got hacked. They sent the money back. Instead of sending it to the community wallet, they sent it to a wallet that the CEO of InnerSpace controlled. So you can see here that the white hat hacker returned a portion, was able to return a portion of those funds that were hacked, but 1.2 million worth of the assets were not returned, and this left a hole in the protocol. A whistleblower on the team flagged that those assets had not been returned to the user's asset pool. Jay Thomas and the team approached Yubo to question him on this. Yubo dropped off the call where a lot of the team members were on. The team informed the public that Yubo was uncontactable for 30 hours. The team led by Jay Thomas and most of the team members came out and announced this to the community. The public knows about the situation and started pulling deposits on InnerSpace, as you can see here. Yubo returns 1.2 million of assets back to InnerSpace, which will be processed by team members to make users whole. And this is where we are. But the bad part is that this is all happening publicly. This is the kind of thing that should be happening internally and be fixed without users knowing about it, because that really makes people nervous. So shout out to NFT Statistics, where he made this great graph here where when this news came out about InnerSpace, users got really nervous and they started to remove their NFTs from the protocol, from the website. And it just kind of like, it was over 4,000 4,000 in probably volume, and it's just down, I would say, below 3,000 here. Pretty significant drop in like just a matter of days. And can you blame people? This is no nerve-wracking thing if you're holding expensive assets on a platform that is having issues publicly. You don't really love to see it, but this is a legitimate protocol. Like a lot of people use it. A lot of people store their ApeCoin on here, and they're backed by some of the best and largest VCs in the world: Sequoia, Founders Fund, Coinbase Ventures. It's really surprising to see this kind of action being done in public. Anyways, moving on. Echoes, which is the project by the founder of Marvel. Some more news on this. The Echoes Genesis Art Collection was only the beginning. The next Marvel Studios is born. They confirmed that Echoes is where the next Marvel Studios is going to continue. And now I'm excited to really see what comes out of the studio. And this is the kind of stuff that Web3 needs to really take it mainstream and bring much more attention to it. So shout out to Echoes here, where they just had a drop with some one-of-one art for their characters. All right, moving along. Crypto had some major news this week. Two pieces in particular. Ethereum had some finalization issues, which we're going to talk about what that means here. And also why BRC20s are clogging the blockchain on Bitcoin, and the Bitcoin ecosystem is in shambles right now because they don't really know, right? There's controversy between the Bitcoin maxis and the people that are working on ordinals and trying to build an ecosystem for other things besides just sending Bitcoin to each other. So let's start off with the finalizing issue here. Shout out to superfizz.eth, where he says, the beacon chain stopped finalizing about 30 minutes ago. I don't know why yet, but in general, the chain is designed to be resilient against this. Transactions will continue as usual, and finalization will kick in when the problem is solved. So you can see here that they were finalizing, and then no. This is all public information, but this is an issue. This is not supposed to happen. But it's not as big as an issue as you may anticipate. And shout out to Bankless, where they tell us, well, what is finalization, if you may be asking? Well, finality is a fundamental property of blockchains. Once a block finalizes, a 15-minute process happens on ETH. Transactions in that block and all previous locks become permanent and are guaranteed forever. Yesterday, we were dealing with round one of beacon chain finalization issues. Despite the scary sounding name, a failure to finalize is not a chain halt, which has happened with Solana and some other chains. End users have no idea that it's occurring, and transactions continue throughout the event, which is true. I mean, I didn't have any issues on Ethereum. I didn't see anybody talk about they had issues on Ethereum. So even though this was happening on the back end, users had no awareness of this happening. And then this is the actual public announcement from the Ethereum Foundation and Prism and Tiku release announcement. On May 11th and 12th, the beacon chain experienced two separate occasions where finality was unable to be reached. This appears to have been caused by high load on some of the consensus layer clients, which in turn was caused by an exceptional scenario. Although the network is unable to finalize, the network was, as designed, live and end users were able to transact on the network. This was made possible due to client diversity, as not all client implementations were infected by this exceptional scenario. After all the clients caught up, the network finalized again. The full cause for this is still being evaluated. However, Teku and Prism have released upgrades that implements optimizations to prevent beacon nodes from high resource usage during these exceptional times. So things are back to normal, but there was a small issue at the time. And good thing that there's decentralization with clients here, or this would have been a bigger problem. All right, so that's that. Let's jump into BRC20's clogging Bitcoin. Not only clogging Bitcoin, but there's also a positive outlook to this. Shout out to Jameson Lope, where he says, Block 780 blah, 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 marks a historic moment in which transaction fees, due to high demand for block space on Bitcoin, have exceeded the mining subsidy. Let me try to explain this as simple as possible and why this is such a big deal. Some of the FUD for Bitcoin, especially from a lot of Ethereum people, is that right now, if Bitcoin were to continue the way it is, especially prior to ordinals just a month ago or so, Bitcoin would eventually run out of money to subsidize its own security. All right. So the way the miners, the people mining Bitcoin, are providing security for the Bitcoin blockchain. Bitcoin pays for security by subsidizing, giving miners Bitcoin. But Bitcoin has a cap, 21 million. Apparently, right, there's going to be only ever 21 million Bitcoin. Eventually, when all that gets mined and it's all subsidized and given to miners, how does the Bitcoin blockchain continue to pay miners to secure the blockchain after the 21 million is released? That's been the question for so long, because there's not enough activity on Bitcoin to cover that fee, the security fee for miners. Well, now, this is what makes this a historical moment in which transaction fees, due to high demand, have exceeded that mining subsidy, the subsidy that pays miners to secure the blockchain. Security has been proven possible. The only remaining question is if the demand is sustainable. This is all thanks to ordinals and BRC20s, which BRC20s are sort of like shitcoins on Bitcoin, and ordinals are like NFTs on Bitcoin. So because of that, people have been active on Bitcoin, and the fees are now exceeding the expenses, which goes to the miners to secure the blockchain. So this is actually not the first time this happened. Shout out to Data Always, where she said this is actually the 36th time. Bitcoin's been around since 2008 or 9, and it's only happened 36 times. That's not sustainable. But if the Bitcoin BRC20 ecosystem continues to grow on Bitcoin, then maybe eventually they're able to cover their costs, like Ethereum has figured out how to do. And just to see a visual of how much the number of transactions, entity-adjusted transactions on Bitcoin have risen. So you can see here, it's gone to an all-time high. It's just gone parabolic the last month. And just to show how drastic it's been in just this month of May, Bitcoin transaction fees for the first 10 days of May surpassed cumulative transaction fees from January to April. That's absolutely wild. It's exploding. It literally is exploding right now, and these are some of the best ways to visually see that. Shout out to Hal Press, where he says the Bitcoin community is in shambles as chaos breaks out. Now they could potentially have to make a decision on the future of the protocol. Meanwhile, ETH quietly continues to burn 10,000 ETH daily, and community comfy knowing they've already solved these problems that the Bitcoin community is now just realizing exist. This was an eye-opener for me. From the view of a Bitcoin maxi, Anita, she says, and she's referring to BRC20s, which Rindal here was talking about. She says, can anyone explain how I'm going to onboard people with these fees now? I can't use on-chain, can't open channels, makes custodial Lightning the only option, and all that because some people think it's fun to break Bitcoin. Why not use Liquid or RSK? All right. Now let's read some of the thread here. Terrible take. No one is looking to break your Bitcoin. We are using it and paying for it. and that's our privilege, right? Inevitably, looks like there's just going to be high fees on Bitcoin. She says, but I'm onboarding people in Africa. They don't have the privilege to pay high fees. They really need Bitcoin, and you guys are just over here experimenting and messing around. These guys really need this. Eric says, there's a lot of other blockchains out there with lower fees. She says, but I want to use the uncensorable one, the neutral, decentralized one, and not all coins. I think Holland makes a really strong point here. Never really looked at it this way. That's a privilege. You are trying to have your cake and eat it too. And if you don't understand that yet, but want to demand having an uncensorable, decentralized chain that's widely used and cheap, you are acting entitled and want charity. The fees are what the fees are. I'm sorry, Bitcoin maxis. I agree with this take that if you are help onboarding people in third world countries, amazing. God bless you for doing these positive things in the world. But that's not how the market works. The market is going to decide what they're going to pay for block space and what's going to be done on there. And if you want to help onboard people to make payments in a decentralized way due to their government issues, then just find a different blockchain, whether that's Solana, whether that's Cardano, whether that's an L2 on Ethereum. It's still a better alternative than what they have now. If Bitcoin is too expensive because people are doing other things on there, then that's just what it is, right? Can't have your cake and eat it too, as Holland very well said. So I thought that was a really interesting point. Also, Bitcoin devs are trying to censor and cancel ordinals. Action should have been taken months ago. This is from the Bitcoin devs. Spam filtration has been a standard part of Bitcoin Core since day one. It's a mistake that the existing filters weren't extended to taproot transactions. We can still address that and try a more narrow approach. So these guys are literally trying to cancel ordinal NFTs and all the stuff that is causing the high transaction fees. And now Hal Press makes a good point where he says if Ethereum devs ever did anything remotely close to the below email, there would be absolute hysterics. People say ETH devs are too centralized with too much power. Look in the mirror. Really good points. So what the hell does BRC20 stand for? And what is it really? Well, it stands for Bitcoin Request for Comment. It was created by a pseudonymous on-chain data enthusiast, Domo. Really has only existed for 2 months. And it took inspiration from the ERC, the Ethereum ERC20 token standard on Ethereum, and launched a token called Ordi on March 8th. Meme token fever is sweeping through the Bitcoin blockchain. The blockchain approached 1 billion on Monday after Ordi, the very first such token but from Bitcoin, was listed on major exchanges. So that's what's happening here. Again, this is the reason Binance had to halt Bitcoin withdrawal issues, the 18x in fees that we just thoroughly looked through. And shout out to Leonidas, who makes a great comparison here between the ERC20 market cap, which are just crypto tokens on Ethereum, to the BRC20 crypto tokens on Bitcoin besides Bitcoin itself. It's got a long way to go. It's very early, but a good visualization to see the difference in size. If you want to check the BRC20 token market, you can go to brc-20.io. You can see that you could either go by top market cap, top volume, and just check out what people are trading right now, which tokens. And you can see that the total market cap at the time was about 60 million. And a couple of last takeaways of BRC20, so you can leave this show this week understanding what they fully are and the important points to know. So the key takeaway is that Bitcoin now has a fungible token standard that lets anyone deploy a unique ticker, like for example Test or Pepe on Bitcoin, whatever it may be, which will start as a free mint. And they're different than the ERC20s. I know BRC20 name makes it sound like it's just like the Ethereum ERC20 token standard on Bitcoin, but they're different. And we're going to be talking about how that's different. So also BRC20 tokens, they're based on numbers. So the first BRC20 token is number 1, the second one is number 2, etc. The market seems to value this in order a lot. Good takeaway there. And also with NFTs and meme coins, it certainly seems like Web3 has arrived on Bitcoin. So really interesting times here. This is one of the most, I think, actually a really good point by Leonidas here, that the best thing about BRC20 is that every coin starts as free mint. Everyone has an equal opportunity to mint. There's no pre-mine. There's no founder shares. This is a killer feature for meme coins. So when we talked about Turbo, the Ethereum token that made the artist some money and was a meme coin running alongside Pepe, we talked about how the creator of that coin held 10% of the coins for himself. He was able to buy a house closer to his daughter's school. None of that exists with BRC20s. No founder coins are held back. There is no pre-mine. There's no pre-sale where certain actors get early access. None of that. It's an even playing field because they're kind of like NFTs, where it starts as a free mint. So even for the founder itself, he has to get in at the ground floor with everybody else. So it really democratizes coin launches and is really an interesting way to drop a meme coin. And that was one of my biggest takeaways from this. Shout out Leonidas. This is really interesting, really, because when I went to the Bitcoin conference 2 years ago, anybody that brought up Ethereum on stage got booed. Whenever I was networking and talking to Bitcoiners and I brought up NFTs or I brought up ETH or anything besides Bitcoin, they dismissed it. They talked badly about it. And they didn't really even want to continue talking to me. And now, this year, the Bitcoin conference Twitter is literally advertising that Ordinals and NFT art is going to be at the Bitcoin blockchain. And that, of course, their Lord and Savior, Michael Saylor, quoted, cross the chasm from what was a bearish scenario to a bullish scenario. So there's really been a complete 180 with Bitcoiners, it seems, and not all of them, as we saw, but it seems like a lot of Bitcoiners have been doing a 180, and even the Bitcoin conference here. And just a visualization to understand a little bit better what the hell Ordinal is, or a BRC20. So one Bitcoin equals 100 million sats. You can inscribe a sat on. You can inscribe either a music file, a picture, or text, which is what a BRC20 is, a token, onto one of these sats, and that's how it works, right? So text is inscribed on each sat. And some thoughts, of course, from one of my favorite crypto thinkers in the space, the DC investor, where he says, in my honest opinion, Bitcoin could never implement an EIP 1559 mechanism, and not just because it would require a hard fork. Well, you might say, well, Nick, what the hell is an EIP 1559 mechanism? Well, real quick, this was introduced on the Ethereum blockchain to provide a base fee for gas fees for users if you wanted to transact, but then on top of that, there was a dynamic fee, which changed based on demand or supply. And then that base fee that you pay as a user gets burned, and it makes Ethereum deflationary because they're burning the supply of Ethereum. And overall, they implemented that because it allowed Ethereum to have a more sustainable economic model for ETH network. So DC investors basically saying that Bitcoin could never implement this kind of mechanism. And in Ethereum, we were going to fire the miners anyway with a transition to proof of stake. In Bitcoin, the miners are more powerful and are motivated with a newly active fee market. And he's saying this because this active fee market, miners are ecstatic about this because the fees go to miners. They don't go to Bitcoin holders. So there's really misalignment between incentives here, is DC investors' point. There would need to be a huge value add to get users to pivot from the status quo. Very hard to imagine this being in the cards in any world, short of one where Bitcoin is about to imminently fail due to waning security. Because on Ethereum, the incentives are aligned, especially since we've moved over to proof of stake. If you buy Ethereum and you stake it, you're simultaneously securing the Ethereum network, but also rewards go to you as a staker. So incentives aligned. With Bitcoin, it doesn't work that way. The fees go to miners who secure the Bitcoin blockchain. They do not go to people holding the Bitcoin itself. And this is the argument DC investor is making. And it's not very easy for Bitcoin to just change. They'd have to hard fork, or they'd have to do something where it'd be a huge change in status quo, and we don't know if Bitcoiners would actually do it. Moving on to WorldCoin. I think people are sleeping on WorldCoin because it is ran by, I think or at least invested by the CEO of OpenAI, and it's more centralized for now. But essentially what it is, it's a simple yet powerful tools are designed to be accessible to everyone. And WorldCoin is used to prove personhood with World ID, a claim. So essentially what it is it scans your eyeball, you receive a World ID, you get free World coins, and then the platform allows you to send digital money globally for free. And they promise that they're not going to store your eyeball data or anything else, which of course, take that with a grain of salt. This is their Twitter handle. But there's some serious adoption here. There's more than 1.6 million people who have joined the app, and 25,000 World ID checks daily. But what's cool is that they're using Ethereum's composability, and they've already integrated apps like Uniswap, ENS, USDC. So pretty good adoption here, and I think at least something to keep an eye on. Also, we know Escher and Tessera had to shut some things down, and now there's another crypto exchange that is filing for bankruptcy, Bittrex. And this is just the type in the cycle where demand volume is down, regulatory issues are causing less people to be in crypto as well, and it's just going to be killing off some crypto startups, unfortunately. We talked about the Ethereum open operating system dropping with Ethereum phone coming. Well, the Solana mobile beat them to it. They just opened up their phone for public orders. So go ahead if you want to go buy a Solana. Go to store.solanamobile.com. I'm very interested to see how it works. But they also announced that Solana Labs is opening a huge office space in New York City. So Solana is expanding. You love to see it. And then the last Solana news is that Dune Analytics platform, which was mainly for Ethereum, has announced that the first non-EVM chain has been decoded on Dune. Solana decoding is now live. So shout out to Solana, the wins this week. Shout out to Watcher.Guru, where he says Goldman Sachs, Microsoft, Deloitte, and others partner to launch a blockchain network, and it's called Canton Network, and it'll begin its testing phase in July. So now you're starting to see centralized blockchains by huge companies here. I'm interested to see what happens here. Shout out to Blockworks. They raised $12 million at $135 million valuation. I like these guys. I've been to Permissionless. I think they do amazing work, and congrats to them. You love to see crypto media doing well. I thought this was an interesting stat here, and great for Ethereum, really. The percentage of Ethereum validators using compliant relays has dropped from 79% to 27%. This is great progress, and this is great for decentralization because OFAC can't just come in and tell an Ethereum validator what to do because they've gone to OFAC that are not compliant. So this is just a positive for Ethereum decentralization. Shout out to Bitcoin Magazine, where it says the Bitcoin miner Marathon, which I believe is the biggest Bitcoin mining company in the world, partners with 02, backed by Abu Dhabi's $853 billion sovereign wealth fund to create the Middle East's first large-scale immersion Bitcoin mining operation. Why is more stuff like this not happening in the U.S.? Partnerships. I know Bitcoin Marathon has a bunch in the U.S., but I don't know. But it seems like the rest of the world is starting to get bullish. Crypto. This still throws me off. Like, seriously, we don't know what the hell Tether is really saying here. They have never verified their numbers officially, but these numbers are mind-boggling. So Tether's latest Q1 2023 assurance report shows reserve surplus at all-time high, $2.4 billion. They made $1.4 billion in net profit just in the quarter. And so one of the executives at Tether further discusses this, and he says that they had a net profit and reserves of $2.4 billion. It was an all-time high for them. They also reduced secured loans from 8 to 6% of reserves, and it shows that direct U.S. T-bill holdings for Tether are over $53 billion, representing more than 64% of reserves. They have a massive reduction in bank deposits, which lowers their unsecured counterparty exposure. Just all great things. They absolutely knocked it out of the park. And everybody always thinks that Tether is the one that's going to go under and just collapse the crypto economy. But somehow they're killing it. So they've never actually fully verified their numbers. So is it trust me, bro kind of meme? I don't know. But either way, I think it's interesting. Shout out to President Biden, where he continues to hate on crypto, which to me is mind-boggling that America is still somehow fighting against crypto, where he says, we don't have time to guess what MAGA House Republicans value. They're telling us. We think Congress should cut tax loopholes that help wealthy crypto investors. Why are you targeting crypto investors? I mean, there's tax loopholes for all kinds of investors. Real estate investors have amazing tax loopholes. So it's just not good when the president is directly targeting one of the most important technical revolutions that we've had in a very long time. So also, with the next few slides, we're going to talk about how regulation is really impacting crypto. And here's one: market makers, where we talked about earlier, Jump Street and Jane Street are retreating from crypto trading in the U.S. as regulatory crackdown in the industry has intensified. You don't love to see it. Liquidity is already bad, as we talked about. Also, this is coming from a U.S. senator. Again, U.S. government targeting a technological revolution that we should be supporting. And he says, there's this fear of missing out. Peru is way ahead of us in cocaine production. China is way ahead of us in organ harvesting. We don't need to keep up on those things that we don't need to keep up on crypto. I mean, you're really comparing crypto to cocaine production and organ harvest. I mean, this is just a horrible look for us. But one of the main takeaways from his talk that day was crypto bros will accuse the U.S. government of making money out of thin air. And then he says, maybe we do, but we are the U.S. government. What the actual fuck does that even mean? That really threw a lot of us off. What gives the U.S. government the power to do that and not crypto protocols? I don't know. But it goes to show their attitude towards all of this, and they just don't really care, it seems like. Shout out to Meta Lawman. Pretty big news here, and really in positive towards crypto. U.S. Chamber of Commerce has just filed a brief in the Coinbase versus SEC case, calling out the SEC for acting unlawfully in the digital asset space. This is the U.S. Chamber of Commerce, not the Chamber of Digital Commerce. This is a pretty big deal. And he says they're declaring that the SEC's actions are just harmful policy, and they're not only harmful, but they're unlawful. And they're really going after the SEC here. So you love to see that. But nonetheless, regulatory pressure is, a lot of people are feeling it in crypto. Bakkt has mass delisted their tokens, including some of the high-profile ones, because of regulatory concerns. Aave and Uni and all ones, some of the largest crypto coins in the space. Also, Binance. Unfortunately, today we are announcing that Binance will be joining other prominent crypto businesses and proactively withdrawing from the Canadian marketplace. The largest crypto exchange in the world is leaving Canada because of regulatory pressure. Pretty wild how crypto is being attacked from all angles and from all places around the world. I know there's some places supporting it, but a lot of places are not. Still, shout out to Sergio, where he says Argentina passed a new fintech law banning digital payment providers from offering crypto service. Another place that is hindering crypto adoption. He says Yula looks to have had 300,000 clients holding crypto with them in a walled garden setup. They're being forced to sell their Bitcoin over the next 30 days. Not good. Not positive for crypto. And then this is just kind of crazy. Judge rules that BlockFi, shout out to Bitcoin magazine on this one, that judge rules that BlockFi users gave up legal rights to their Bitcoin by using the platform. And all the 300 million of crypto deposits are not property of BlockFi. Wow. Not your keys, not your wallet. This is what could happen if you hold it on exchange and then go belly up. It's not even your money, apparently, to this judge. And some positive news, I think, in just currency talk, and in Florida, which is where we are, Governor DeSantis of Florida has issued an official ban on CBDCs within the state. The bill has officially passed. So good news there. Also, the Lix Foundation, which this is them, they're an open source blockchain application platform written in JavaScript. They made a pretty big move this week. They're exchanging 1,000 of their Bitcoin into Ethereum over the next 10 weeks and will hold on to them as part of their long-term treasury strategy. And you may say, well, why would they do that? Well, they think that Ethereum is the biggest blockchain platform in the world. Treasury-wise, we want to go where blockchain applications are being built. ETH is the second biggest cryptocurrency in the world. Treasury-wise, it has acceptable risks. And ETH enables a sustainable long-term yield. We know if you stake, you receive a yield. So treasury-wise, it makes sense to go into an appreciating, deflationary, and yield-generating asset. Pretty big move here. So I imagine how many other protocols feel this way and make some sort of decisions like this in the near future, now that it's easy to go and stake your Ethereum. And we're getting towards the end here, but Stripe integration with Loop, it's a pretty big deal. Loop focuses on providing reoccurring crypto payments on crypto wallets, which is much needed in the crypto space. You can't even have a subscription-based model as a startup because there really is no way to do reoccurring payments on crypto. But Loop Crypto is looking to solve that. And it looks like with Stripe, they're going to be able to do that. So that's pretty cool. That's all we got for you folks. Thank you for joining us, and we will see you next week on another episode of Web3 Weekly Alpha. Your host, Serpunk. Peace.